Well, the big August jobs report is going to come out tomorrow morning, and that will provide the latest view into the health of the U.S. economy. Of course, August was a month characterized by market volatility and heightened jitters about trade on Wall Street. Joining us now from San Francisco for a preview of that jobs report is Manpower Group President Becky Frankiewicz. Becky, thanks for coming on.
Thank you for having me.
So what can we expect to see in tomorrow's report? Now, we did just minutes before we started our show today at 10 a.m. get a tweet from President Trump touting the jobs numbers, saying that they were great numbers. Of course, that is still about the expectations. But what are you hearing? What do you expect out of that jobs report?
Yeah, so this jobs report is under heavy scrutiny given all the recession rhetoric. But candidly, at Manpower Group's 11,000 clients, including the majority of the Fortune 200, the real-time view is that we have jobs to fill and companies that intend to hire. So we expect to see steady job growth out of the report tomorrow. Now, we won't be surprised by some softening in manufacturing, given all the talk on trade. We anticipate that'll be made up by increased demand in IT, as well as some early hiring for the holiday season out of retail.
Now, Becky, sometimes in the August report, we tend to see some weakness just because the response rate is a little bit lower, right? People are away on vacation, so companies don't necessarily sort of log their job hirings to the government. So I guess what kind of fallout are you expecting from that dynamic? And if we do get some softness for that reason, could that sort of unintentionally raise the fears of a recession?
Yeah, well, the thing to keep in mind is a jobs report is a point in time. And so even if we see softening, we still are underreporting, as you mentioned. We still anticipate that there'll be job growth. And honestly, the recession rhetoric, at this point, the real-time view is that's rhetoric. There's still thin supply of labor in our country, increased demand, particularly for skilled trades. So we anticipate continued growth from jobs. And anything that shows a slowdown is likely either due to underreporting or some fears that are happening in the market around recession.
Yeah, so we're talking about the recession, but what about the trade war? We've had CEOs talk about the impact that's having on their business. And when it comes to business sentiment, we've seen that be impacted. So isn't that going to be reflected in the jobs report tomorrow?
So we think that will show up in manufacturing, hence the mention of we could see some softening in manufacturing. To be honest, we saw a little slowdown earlier this year from some of our IT clients. For about 6 weeks, there was some hesitation, some wait and see. We saw that pick back up as we went into April and May. Now we're seeing that same kind of wait and see in manufacturing. So we could see that manifest itself in the manufacturing numbers tomorrow.
Well, and just quickly, just on the manufacturing front, I mean, that's only 12% of GDP. So I guess a slowdown or a continued slowdown in that sector, isn't necessarily powerful enough to bring the entire economy into a recession, right?
Totally consistent with our view. And again, recession is forward-looking. I heard that the most Googled word in July was recession. That's what people are talking about. But the real-time, real-world view is, honestly around upskilling and how do we make sure we teach new skills to talent for future jobs? How do we retain that talent with a quit rate that's at a 10-year high? And then how do we get a return on investment for the training dollars? That's honestly the conversation in the boardroom today.
Becky, I mentioned when we started our segment with you that we got a tweet from President Trump saying really good jobs numbers. And because you cover this stuff so closely, I just want to get your take. I mean, there's the actual reports that we get every time we get the jobs report and whatever hard data is contained. But then on the other hand, you get a President Trump tweet, and that can really change things and reverse sentiment. What do you make of that cycle that we're now in and how reliant stocks can be on some days off of one or two President Trump tweets?
Yeah, definitely it's impactful. But again, I would say we saw the ADP numbers come out today. They're just under 200,000. And so there is some credence for the fact that we anticipate good jobs numbers again tomorrow. And that should be, the facts should be what guide our projections around stock versus the rhetoric.
All right, Becky, thanks so much for joining us.
Thank you.